After 23 years of implementing the double taxation agreement on withholding tax, the federal government plans to implement a uniform rate for residents and non-resident companies from July 1st, 2022. Tax experts who spoke with AIT say a uniform withholding tax will help governments to generate more revenue, but express concern over the termination of a tax treaty with just issuance of a circular.
In 1999, Nigeria signed a double taxation agreement with different countries, including Belgium, Canada, United Kingdom, France, and China, to attract more investment into the country. The agreement was that 7.5% withholding tax instead of 10% should be paid on dividends, interest, and royalties by residents of Nigeria and other countries with double taxation agreements. In its bid to increase tax revenue, the federal government in a circular announced that it will revert to a uniform rate of 10% from July 1st, 2022.
The withholding tax was reduced to 7.5%. So what FRS is saying is that there's no reason for the discrimination in the rate where Nigerian residents or Nigerian companies are being subjected to 10%, while people or companies in other countries, particularly in treaty countries, are being subjected to 7.5%, which is more or less one of the tax expenditure issues that we have, giving incentive. So they're just trying to withdraw that incentive by making it, equal to those who are resident in Nigeria. That is, from 7.5% to 10%.
The managing partner, Pedabo Albert Folonsho, said the withholding tax rate for residents remains 10%.
There is no plan to, I'm sure there is no plan to increase withholding tax on any other transaction. In fact, the agitation all over the place is that the withholding tax should be reduced so as to remove the issue around having to pay more than what is even liable. And then the company will now have to start claiming refund from the tax authority. So I don't believe there is any discussion around increasing withholding tax rate on either services or fees or contracts and all that. In fact, the agitation is as to whether those rates can be reduced so that, and then widen the base much more than what we have, and then make it clearer to be applied.
Others raised the concern on reversing an international treaty with just issuing a circular instead of legislation.
Because of course you know that when there is a tax treaty, there is a benefit, because if you pay the higher tax in the other country and you come back, you can and you claim it. Of course, it will you had to pay the higher tax in the other country relative to what you are paid in Nigeria. Of course, there is a way the whole thing is calculated, and then you get benefit. So for Nigeria, first and foremost, yes, Nigeria as a sovereign country can decide on what its tax policy and rules should be. But when it comes to tax treaty, partners, then they have to. Once you have done that change, then you have to go back to the negotiating table, because everybody has to look at it. Am I worse off? And if you are going to be worse off, then we need to look at it. And how do we now come to a better? Because the tax treaty is supposed to give rise to some tax advantages and not disadvantage.
As the federal government strives to increase revenue generated from taxation, tax experts are highlighting the need to avoid economic policies that will hinder investments. Nkiru Mukedi, AIT News, Lagos.